Overall, this week was very eventful in terms of the domestic markets. Nifty and Sensex hit 16-month highs, but they were unable to hold on to their gains. And Friday was a day of sell-off. Earlier in the week, we had seen Nifty touch a high of 8968, but again we saw a sell-off happening on Friday, and Nifty closed down at 8866, 8866. It was marginally up by 0.65%. Whereas the Bombay Stock Exchange, the Sensex breached the 29,000 mark on the upside, but somehow it also was unable to hold on to its gains, and it ended the week at 28,797. If you look at the global markets per se, be the Asian markets, European markets, or the American markets, overall we are seeing some sort of consolidation, profit booking coming in. And now we are having the US Federal Reserve two-day meet, that is on September 20th and 21st. So where they would be deciding on interest rate, or their statement is going to carry a lot of weight. So going forward, investors would pay close attention to that happening. Apart from that, ECB earlier this week, they had the meeting, so they left the interest rates unchanged. So the status quo was as expected by the markets. But what didn't happen was that the ECB did not speak on anything whether they would extend the bond buying program which they have on a monthly basis beyond March 2017. So that's somewhat which impacted the markets slightly. Looking at going forward, how the markets are likely to be going forward in the next week. Overall, the long-term trend definitely remains up if you look at the domestic markets. However, we are seeing some profit booking coming in the markets. But on the FII side, we continue to see regular buying from the FII, so that's positive. On the downside for Nifty, major crucial support level comes at around, earlier it was the major level of resistance coming around 8720, 8730. That's a major short-term support you can say for Nifty. Whereas on the upside, the resistance level would be 9,000, that's a psychological level, and if that is taken out, then we have the 9119 earlier high that the market would look forward to. So overall, the market would depend on 3-4 factors, one being the major global cues, how they emanate. Apart from that, it would be the overall interest of the investors as to how they would continue holding on to their positions, or whether there would be some profit booking. And as far as sectors are concerned, the best performing sector last week was the realty sector, wherein the housing loan companies, they performed exceedingly well. The sector gained almost more than 5%. Auto sector was a top performer, and among the least performing or the worst performers were IT, primarily on the back of TCS. In its Q2 guidance, it came out with disappointing views. So that led to a sell-off across the board in IT space. So that's a cause of concern. Going forward, as I said, the overall trend definitely remains bullish. Yes, short term we might see some correction because we've seen a significant rally across the board, and so some profit booking would come in. So that should be used as a buying opportunity. Specific stocks to look at, one can look at Amar batteries, one can look at Bajaj Electricals, and one can also look at Blue Star from an investing perspective.